Welcome everyone to this replay video for the higher time frame box strategy. Recently, Nvidia had a massive sell-off day of nearly $27. This was nearly double its average true range, or ATR. Using the strategy, the higher time frame box strategy, you can be prepped and ready to catch major moves like this. What causes these types of moves is the buildup over the course of days, weeks, or months, and a lot of psychological turmoil and excitement when they break. Think if you were a buyer in this area here on Nvidia. When this box breaks, you're going to start covering your position, and more sellers will begin to step in. Remember, trading is a game of psychology. Movements in the stock that you're watching have a lot to do with greed, FOMO, and panic. Now, before we get into this trade, let's take a look at the criteria that we need for the setup. First, we want to see a clear range or box on the weekly, daily, or 60-minute chart. In this case, we're looking at the 60-minute chart here on Nvidia. Then we want to draw our levels where we have the most touches. So we're not necessarily looking at the very tops and bottoms of this range. We're actually looking at an area where we have more candles touching a level. So we're looking at this area here, somewhere in here, here, the little tip of this guy here, and then it just kind of cuts through right to this side here. Then we want to wait for a day when a Camarilla pivot point aligns with our level. On this day in particular, R3 aligns with our level, so now we're interested in the trade. For those of you that are unfamiliar with Camarilla pivot points, R3 tends to be more of a selling zone. Not always, but that's what we're looking for when we're in the R3 area. And so on this day in particular, when this level aligns with R3, we're a little bit more interested in it being a sell position. So let's take a look at how we could have executed this trade on June 26th. All right, so we're over on Trading Terminals Replay Simulator, and I've got Nvidia queued up from June 26th, as you'll see noted in this little calendar down here. And I've gone ahead and marked our level, which was 422.12 off of the previous chart that I showed you. And right above it, I have R3 marked as well. So this is the 422.71. This is where R3 was sitting that day. Now I'm going to go ahead and hit play on this, and we're going to see how it plays out. So we're opening above the level and above R3. Now, typically I would say if we're opening above the level, maybe let it come down and bounce off of it and then get back into the range. But the fact that R3 is sitting down here makes me a little nervous in taking it for a bounce play. So I'm just going to let it see how it interacts with the level. And that's what I would be looking for. Let's see how it interacts with the level and the Camarilla pivot, and then we'll kind of go from there. So I'm watching this, just letting it play out, and we'll fast forward a little bit to where it starts to interact with the level as well. Now, before I do that though, I want to talk about where our stop loss should go. So for our stop loss in this strategy in particular, we're looking at 10% of the ATR. Now, Nvidia's average true range around this time is actually $14, $15. So 10% of that is about $1.50. So when we go into this position, we're going to go with a little bit of a wider stop. Now what this does is it helps you stay in the position for a little bit longer in case the stock decides to bounce around in the area or around the level that you're trading. So it might come down here and it just might do this. But when we have wider stops, it's a little bit easier to hang on to the position without getting stopped out too much. And because we're trading off of higher time frames, we're going for bigger moves and we're going to the next higher time frame level or area. So it's okay to leave a little bit of a wider stop because you're going for something that's much larger than you might typically go for on, say, a 1 minute or 2 minute chart. So I've gone ahead and I've skipped forward a little bit on the chart on the day. So I wanted to get it to the point where it begins to interact with the Camarilla pivot point and the level. Now, before we hit play on this again, what I want to do is I want to mark where my stop loss should be. So 10% of the ATR, which was about $15, would be $1.50, right? So in this case, our level is 422.12. So we would want our stop to be at 423.62. So that would be $1.50 away. So I would go ahead and just mark this here. Okay, so we've got our stop marked, and now what I want to see is I want to see what happens as it starts to break the level. If it breaks the level, we obviously know what begins to happen because we've already seen it, but sometimes it doesn't break the level, so you have to be prepared for that as well. So we're just going to watch it and see what it ends up looking like. So now, as it begins to break through the Camarilla pivot point, we want to be watching to make sure that it doesn't hold. So it's breaking through the pivot point. There doesn't seem to be a lot of buying coming in. We're waiting for it to test the level. And if it starts to break the level, we're going to enter into it. We're going to enter into it with a very wide stop so that in case it decides to chop around, we can survive it. You can also wait for pullbacks, but on things that begin to drop on heavy volume like this, notice how the volume increases as this is dropping. There may not be a pullback. It may just begin flushing. So it's up to you whether you want to wait for a pullback or you want to enter in right at the level, but know that you have a wide stop to save you in case it's not quite ready to go yet. So as this gets closer and closer to the level, as soon as it touches it, I'm just going to enter into a short position here. And as it starts to break it, I'll decide what I want to do. Or if it doesn't break it immediately and it makes me uncomfortable, I can just get out. That's the beauty of day trading, right? When you get into a position, you do not have to stay in the position. You can get out of it and let it reset itself. So in this case on Nvidia, it does begin to drop very quickly, and it doesn't look like it's offering that much of a pullback. So let's just see if it offers anything at all. And I'm just going to go ahead and fast forward it a little bit so we can see what happens. And in this case, you know, it does give a little bit of a pullback, but not to the level. So you could begin to consider playing something like this in the pullback, a bear flag or a channel break. I like to be as close to the level as possible because that's where I know if I'm right or wrong, right? If it gets back above this level, I might be wrong at that moment. So I really want to play the level because that's my safety point. Now, as this is falling, because we're playing the higher time frames, we're looking for areas on the higher time frame for support and resistance. So I've moved over to the 60-minute chart because I want to see if, as this is breaking, where might we find support. So I'm just going to scroll over like this, and what I'm looking for are other areas and other ranges where the stock is held previously. So what I can see here is we've got a little bit of a bounce point here. It was a little bit of resistance at one point, and then it became support. So somewhere in this area, I'm looking to either exit the position or at least be cautious and take partials. You can also take partials at whole dollars, technical levels like pivots, previous day's close, previous day's high, previous day's low, things like that. But what we're really wanting to pay attention to is the bigger picture time frame because that's what we're playing. So somewhere in this area is probably around, 415. So that's at least what we'll aim for, and we'll just see if Nvidia can get itself there. If we see something strange on the volume, like a bounce coming in sooner, we'll be prepared to take a partial. And other than that, we're just looking for technical levels and key resistance and support areas located on the bigger picture. So we're just going to go ahead and ride this wave unless something comes up, unless there's a key technical area to pay attention to, or we really start to see a lot of volume. And we do start to see volume here. So I would actually just go ahead and I would buy back a little bit of my position. I want to take a partial here because we've got a little bit of volume on this wick right here, and it continues to flush. But you never know. It might bounce a little bit. So I've taken a partial there just to be safe. Then we'll just go ahead and we'll speed it up to see what happens here. So it's actually hit 415, and that's my target. That's where I actually thought we would go to. So I'm going to go ahead and exit most of the position. And I could continue to let it run, or I could just get out of this target area. Completely up to you. It's almost ran a full ATR for the day, but not quite. So it could still have a little bit of room to go. So it's completely up to you where you feel comfortable getting out of the position. But because this is broken 415 and it's not really getting back above it right now, I would stay in a little bit longer. And then you can just continue to ride the drop and profit on your trade. So we'll go ahead and exit this position. But you could stay in it, continuing to gain profit the rest of the day as the stock drops if it continues on, looking for those higher time frame technicals and support and resistance zones. And that is the higher time frame box strategy.